Now, has the Federal Reserve sent gold on a bull market run with their latest policy decision? Now, if you look at the seasonal pattern for gold, you can see that this is one of the hottest times of the year for gold. And from the end of December, particularly after the last Fed meeting, which we have now, through to early February, you can just see that gold has a very, very strong seasonal pattern going from now through to February. 76% winning trade percentage, average return of 4.36%. Some of the maximum gains, excellent, double digit in some instances. And the maximum drop, if you look at these levels, the maximum kind of fall we've had is about sort of 8%, 7%. There's been 6% falls. Now, the dot plot was a surprise yesterday. You can see that the Federal Reserve now projecting 3 rate cuts next year with a median dot plot of 4.6%, 3.6% for 2025, the longer run out 2.5%. So that is a big change from the September dot plot. And markets are sort of running with that as seeing the Fed recognizing that they're expecting to start cutting rates into 2024. And that's just opened up the potential upside for gold. If we take a look at, let's just find here, the interplay between the real yields and the dollar, you notice that when you have real yields and the dollar falling lower, that's a real strong upwind for gold. So what we're seeing now is the dollar falling. Why? Because the Fed sort of signal peak interest rates. We're also seeing real yields falling. Why? That's the nominal bond yield. So US 10-year yields minus inflation expectations. That's falling. We saw a big bid come into bonds on that dovish pricing from the FOMC last night. So that just gives a clear upside for gold. So now looking at gold from a strategical point of view, if we just look at gold, you can see that gold has put in a strong outside reversal bar on the daily chart. If you just look at this near-term resistance, old resistance becomes new support. We've got a bullish engulfing bar on the daily chart. Any retracements back down to that 2012 region is now a high conviction buy. And stops can be placed super easily, they can be placed just underneath that region there. And then you can potentially look at taking profit to 100, to 150, or just trail the stop as it goes up. Are we going to be smashing out through those all-time highs that we've recently made? And is this sort of going to be a false break? Or, is this going to be a false attempt of a false break, right, of this triple top? So there's a lot of potential for upside here in gold, and Fed policy shifting is a strong bullish signal. We see the RSI signal just moving higher. You can see momentum clearly moving to the upside. Stops can be placed underneath 1968. You can really manage risk very carefully here, and that does give a good potential for more upside in gold. Remember, don't just trade it, Seasonax It.